right. Hello, everybody. Welcome back to the Beer in Boots podcast. We have a very exciting episode today with guest speaker Tanya Fry from Harry Fry and Associates. So those of you that are in the crane world that may need to finance a crane or a piece of heavy equipment, Tanya is the guru with her company for this specific service. Very tied in with the long-term SCNRA member like ourselves. And it's great to not only be able to catch up with Tanya and her team at the SCNRA shows, but we are very fortunate that she's patching in from Massachusetts today. So welcome, Tanya.
Thank you. I really appreciate you guys having me. And I just wanted to say that I love that you're doing a podcast because I think insurance and finance are some of the most boring things.
Trying to spice it up a bit.
Yeah, exactly. Make it fun. So I really appreciate that you both invited me to join. So
yeah, we're very excited. And good morning, everyone, as well. Landon here. Like Cam said, we have Tanya here today. And when I first started, 8 years ago, I had known of Harry Fry and Associates. They have always been someone we have worked in conjunction with, mutual relationships. And so very excited to kind of present and so everyone else understands what the history is of Harry Fry and Associates and what's your story, what's your background so that our listeners can learn more.
Sure. So probably, my father started the company, but he actually started in finance probably 40 plus years ago. And prior to starting our company, worked for Mercedes-Benz Credit Corporation. And we actually had to move around a lot. And when I got into high school, he promised me we wouldn't move anymore. So mid 90s, Mercedes came to him and was like, we want to move you again. And he said no. And at the same time, they had presented him with an opportunity to kind of go off on his own. And he was given a choice of what equipment he wanted to finance. So I think the choices were like, airplanes, coach buses, yachts, and then cranes, I think. And he chose cranes because, they really do hold their value, and thought long term that would be, the best thing for us. So in about 1995, he started with just himself, basically flying all over this country when it was much easier to do, and just established relationships, and initially was just financing for truck cranes. And then we branched out from there. So, over the past, 25 plus years, we've brought on a number of different lenders and different, lines, and we finance companies from, your small owner operator to publicly traded companies. And I did fail to mention that Cheryl actually joined him about 2 years in. And what's kind of interesting about that is when she used to go to SCRA, she was probably one of like 3 women that were there.
I can only imagine at that time.
Yeah. It was so different then. And so what's great to see is Landon, like someone like yourself, and even, generational businesses that are starting to bring, daughters in and wives in. There's so many more women in the business too. So, and sorry if I'm getting long-winded.
No, the floor is yours.
If I was Harry, I would have picked cranes too, FYI.
Well, and he's like, they're so much more interesting, and when, SCRA says, lift and move the world, they really do. So I think it's a really fun industry to be part of. So, as far as my background goes, when he started this company when I was in high school, I used to, answer the phones and input the data. And then when I graduated from Stonehill, I had a background in economics, and I didn't want to come out and go work right for my parents. I wanted to kind of see what was out there and make sure it was something I really wanted to do. So I had a job right out of college with State Street Corporation, and I worked in portfolio administration and private equity probably for about 3 or 4 years. And then I think it was May of 2004. My parents approached me because, we, had been growing, and they said they either needed to hire someone or did I want to come on? And it was kind of at the right time because I was really tired of commuting into Boston, and I liked what I did, but I didn't love it. So I joined them, and, that was little less than 20 years ago, 2004. So, and I've been here ever since. So.
Nice.
Yeah, I feel, when I joined the industry as well, it was like, oh, am I going to do this in the crane space? What is going on? And then you're in it and you just fall in love with it, and then the rest is history.
Yeah, absolutely. I agree with you. I think what's great about this industry is people that you see at the meetings, they're more than just customers, they're friends.
Yeah. And so, what would you say? I think something that's really important for our listeners to understand and what we want to, paint the picture for them is, what do you think the current marketplace looks like for equipment financing coming into 2024, and what can these customers expect?
Sure. So, financing right now, I would say that lenders are a little bit tighter, and I think it's for a few reasons. First, if even just today, like when you look in the media, there's an article about how the economy, like the bottom's going to drop out. And then you have someone else's opinion that's like, no, I think we're on a good track. And then someone else says, oh, it's going to be a soft landing. So you've got all this going on. And I think that lenders, they tend to tighten up a little bit when they hear that. So we've definitely seen that happen. Like, and I don't want to discourage people from financing at all, because lenders are definitely lending, but to kind of be prepared to be asked, some additional questions, to provide additional information. And I tell people the reason for that is, like, don't take it personally. It's far more regulated. There's more auditors. So people are trying to fill the file as to why they did a deal. And my job is to make it as easy as I can and clarify it for the customer. So, and the other thing I think we're seeing a lot of as to why lenders have been a little bit tighter is there's a lot of fraud out there.
Yeah.
And with the lack of supply, people are purchasing from private, it's a private party sale, so an end user, not a dealer, which is a great thing. But the lenders have to really do their due diligence on both the buyer and the seller. So, but overall, I think the banks are still lending. And I don't think we need to be discouraged with the rates being a little higher, because I think we're going to start to see them come down a little bit. So
Now, would you say that the fraud more so that you're talking about started after COVID type of thing?
I think
Okay.
there was a significant increase after COVID, because it was harder for people to get around. And one of the things that we really encouraged that I don't think people did when it was tougher to travel is go look at that crane.
Yeah.
Go make sure, kick the tires, make sure it exists. That was a great point you made, because I do think post-COVID, it has definitely increased.
Yeah, and even we've seen the equipment financing be so relevant just with our day-to-day, specifically with our insureds as well as prospective insureds. Like, I'm sure you see it all the time, just as well as we see it all the time. Startup crane companies, individuals now having the opportunity to say, I want to go out on my own and I want to start my business and carve my own path.
Right.
I would say back like 2016 to 2019, I think we were bringing on average one startup a month. We've definitely seen that slow down, and a lot of that feedback that we're getting is just being able to find, let's say, that capacity, that financing to be able to obtain the crane. And then on the second part, everybody's having the opportunity to do work with larger capacity cranes, and they're like, hey, the work's there, I can justify this, but then obtaining it has been a mess.
Right. And I think to your point too, with the startups is sometimes they forget that in conjunction with finding and financing the crane is insuring it. I have a lot of customers that I'm like, you really have to do some research on this, because it's not like I'm just going to call my local agent, slap a policy on it and be done. Like, I have seen it take weeks, sometimes months, to get the right coverage in place. So there's a lot of a lot of facets to it.
Yeah. I think that's what 90% of people, just like you said, that is how their mind works, is they think it's like Progressive, State Farm. Hey, I just bought a crane, $2 million crane. Can I have coverage needed tomorrow? I'm like, that is not how this game works, how this process works at all.
Well, you're 100% right, and I think one of your questions that maybe we'll get to
Yeah.
later. I I'm not an insurance agent. It's not what I do, but I always tell people, I'm like, insuring this is not insuring a truck just
Yep.
because it's on a truck chassis. So we do get into that a lot, like making sure that like it has the proper coverage.
Yeah. So what are your 2024 recommendations for crane owners out there?
Sure. So it's a question I definitely get a lot from like a lot of the publications that we'll write for, and I wish I had a crystal ball, because if I did, I'd probably be pretty well off, right?
Yeah.
I think what I say to most people is, and I'll go from like what I see, what I hear, and what I tell them. So I've seen, business has been up and down. Like we've had very strong months, and we've had months that just steady. Like I wouldn't say weak, but just kind of up and down. Which I think shows me that people are optimistic. Their jobs are still going on. I think really what's happening is they're having difficulty finding good equipment. And I think if the equipment was there and the deliveries were on time, we would not have this up and down. I think my recommendations for crane owners is to take a look at really what's going on, like I was saying, your neighborhood, in your geographic market.
Yeah.
What's happening with your business? Has the phone slowed down, or is it still ringing off the hook? Because that's really going to be your best gauge as to what is going on. I mean, I honestly try not to even pay attention to the media anymore, because like I said earlier, it's it's going to fall out tomorrow. It's going to be great. So I think my recommendations is just, pay attention to what's around you and, what you see with your own jobs. As far as financing goes, it seems like there's some rumblings that the rates may start to come down again. So I'm hoping that, encourages people to, reconsider buying. But I'll tell you, people have not really been scared off of the higher rates because they need the equipment.
Yeah.
So,
Yeah.
I know. I'm like, I don't really know what else I really have to recommend. I mean, that would really be it. And well, on the finance side too, be prepared when you submit a package for those additional questions. We try and keep it as simple as we can, and be prepared to provide the additional information. It makes my job easier. If you're trying to get approved for a crane that's, over 500,000, close to $1 million, and you don't have, your internals for 2023 and it's March, I'm going to have some struggles.
Yeah. And I mean, that's the same thing that, we're dealing with as well, is just like with underwriters, it's more questions, it's more digging. It's, you have to understand what you're working with now more than ever. So be prepared for that on all facets of your business. There's just going to be so many more questions. And it's to position you the best, to position us, to position them the best.
Right. And you make a really good point there, because a lot of the times when I have to go back to a customer for something, I'm like, but this is for your benefit.
Yeah.
Or this, especially like on a private party deal, everyone wants it done yesterday, but I'm trying to make sure the title's clear and the UCC search is done. Like, this is for your benefit. I know it doesn't help you today, but trust, like, you want it done the right way. So
Absolutely.
Well, we've asked you multiple questions, and we always want to keep the floor open for questions for us. So any questions for us specifically?
So what I found interesting, and I had only really heard about it within the past year, is I didn't realize that customers could finance their premiums, which kind of makes sense considering, premiums have gone up so much. So what are you seeing in that market? How does that affect your customers, and what are you seeing with that?
Boots, go ahead.
I'll take that one. I would say from the premium financing space, it probably follows suit on any other types of financing, like specifically equipment financing. It has gone up significantly the past few years, really because it is also following that Fed rate.
Yes.
But
Yes.
there's been some ways to get creative that we recommend with our insureds and prospective insureds of if you've got a really good financial standing, and let's say you have policies that require 25% down specifically to put that policy into place. We have some very good relationships in the premium financing world that if, let's say, you have good financials, they will take that risk on you a little bit to get that down payment down and spread it out longer specifically. We also are seeing there are quite a few carriers within our space that direct bill, where they're sending that bill directly, avoiding, let's say, that financing option, which is obviously a great opportunity. But as far as premium financing goes, obviously, when you look at the cost of insurance for a crane company being one of the top 3 largest expenses, paying that all up front, that's going to be a big burden and a big cost. So being able to spread that out, just like the payment for a crane, it almost goes hand in hand. If you have a crane company that is, let's say, paying the crane in cash, all of that, everything, you might see them also pay their insurance up front or within the first 30 days. But mostly, probably 90%, is financing.
So with the financing of premiums, because I would assume premiums are due on an annual basis, is it financed just over a 12-month period?
Yes.
So what's the difference with that than if you took your premium and you just like split it up over 12 months? Like, why is it financed? Does that make sense? I don't know if I'm like talking about the same thing. So I'm thinking of like my auto insurance, right? And they're like, oh, you can pay it over 10 months. But I don't think there's a finance charge on it. So
there's different.
Kind of understand.
Yeah, different insurance carriers have different terms depending on if they're admitted, if they're non-admitted, if they're within the E&S surplus line space where they require it up front because let's say the situation, and it's very prevalent within the crane rigging and heavy haul space, that it is non-admitted carriers providing general liability and excess liability. So they are a specialized carrier that is taking a little bit more risk, and they want that premium up front, which is why premium finance comes into play.
Makes sense.
Some of those markets, like I said, will do direct bill, but others would rather say we're taking this risk now, we want the money up front, and that's where that premium finance comes into play.
That makes sense. So what would you guys say? Why have the premiums increased so much? I feel like over the past few years, it's kind of been a big thing, and we've actually had to like educate some of our lenders because it used to be one of the requirements with financing. I mean, you always have to provide proof of insurance, but the deductible used to be it had to be $10,000 or under, and now we see I think it was like 2% of like the claim or something like that.
2% of the value of the crane, yeah.
Yes, exactly.
Yep.
And we had a lender just recently, and we looked at their insurance requirements, and we were like, I think we're going to have to kind of educate them on this, that this requirement is kind of no longer. So what has caused that?
You want to talk about Carl?
Yeah, so we've implemented a new guest to our podcast. His name is Carl. Crane owners don't really like Carl because Carl stands for Capacity, Access, Reinsurance, and Losses. And that is, if anything, the main reason where property insurance is priced where it is right now, as well as liability for general liability and auto liability. So to quickly go through that with Carl, capacity, specific programs are granted capacity by insurance writing companies to write premium. That is starting to get a lot more strict. And then that ties into the access to get more capacity. That is also getting more strict because they see these larger property claims, whether it's from hurricanes, riots, tornadoes.
So they have to tighten up.
Larger pieces of equipment going down. I think the biggest misconception, and we covered this on our first podcast, let's say you have a total insurable value equipment schedule of $10 million. And that goes up to 30 million. But from that delta of that 10 to 30, you added all 900-ton all-terrain cranes that are above 5 million in value.
Okay.
Your rate may go down, but it's not going to go down much because a $5 million crane to a property carrier, they have to go get reinsurance for that because the reference that we always use, if that gets totaled, that's a $5 million payout right there. That's
Right.
almost worse for an insurance carrier than managing a fatality.
Yeah.
Wow. Okay.
Because the fatality can be spread across the timing as to when that necessarily gets paid out, when that gets settled, as
Right.
well as what have we seen more often in our space right now? Cranes being totaled versus fatalities. So that is driving a lot of that, not only insurance cost, but then to touch base on that reinsurance and losses as well. Reinsurance is basically the treaty that these programs get, that the guidelines that they need to follow. So
Okay.
one of like the inland marine carriers that had a $2,500 deductible, their reinsurance treaty could say we need higher deductibles because we paid out so and so in claims this past year, so we need to
Right.
increase that deductible. And finally the L, which is the common one, losses, like we've discussed. So that's really
Right.
what's driving. There is a general, when you look at general property markets, not necessarily specialized property markets within the crane space, the
Right.
general marketplace is saying double the premium,
Yeah.
half of the limit, double the deductible is as far as what they're expecting from year over year. And if you think about that, your premium's going up for less availability, less capacity, less access. That's the general marketplace term for, like, let's say just property. Luckily, we've been insulated a little bit from that because we've got some great relationships in the property and in the marine marketplace within this
Right.
space. But that's the general consensus right now.
So, kind of along those lines, I was at a conference back in the summer, and insurance came up because that's obviously it's a very big topic for crane companies. Are you seeing a lot of customers do, and I don't know if I'm going to use the right term, like a co-op or like a captive where like there's a bunch of crane companies in one group, and I don't 100% know how it works, but it's like they spread the cost almost across all of them. And if there's no incidences, I think they get money back. I forget what the term for it was, but it was really interesting because I didn't realize that some of them were doing that. And I think they said to get in, it was a little bit expensive at first, but over like after like a 3 to 5 year time period, they found that they benefited from it. But I just forget what they called it.
Yeah, so that is there's multiple terms from that, but to simplify it, of the most common one, especially that we hear at the SCNRA, is captives.
Okay.
So one of the preferred market partners for the SCNRA, National Interstate, they provide a very focused captive for crane,
Okay.
rigging, and heavy hull companies. But to take that into consideration, the inland marine portion and property isn't included in that, as well as from the
Okay.
Always
marketplace perspective. That is very tough at this point to get a captive model on equipment.
Right.
I think it definitely makes sense for specific crane companies to, let's say, have that option, because usually inland
Right.
marine on that fleet is one of your highest lines of cost. But right now within that property market, there are captive options for it. But like, let's say that minimum premium level to get there is pretty substantial. So that's why it's
Yeah.
not necessarily always relevant for the space that we're in with our clients.
Right, right. What do you guys think is the most important coverages for crane customers?
Love this question. This is a point in a topic with the majority of our prospective insureds as well as our clients all the time, as far as having the finger on the pulse of how to insure your fleet, specifically cranes.
And out of general liability, auto, comp, excess, and the marine, it is absolutely the most important to have an agent that understands what you're doing for your operations, because those coverages are very tailored, dependent, if you're a company that's lifting HVAC units versus wind turbines. The coverages and limits that you need for both of those pieces are going to be very, very vast and very different.
Right.
So
I mean, interrupt.
No,
we
go ahead.
do a lot in the tree industry as well,
Yep.
and that's a whole other animal I'm kind of finding out too.
A bear. Like trees or underwriters hate that word.
So
I know.
so just like you see when you have a client and you get their insurance terms back and you're like, these aren't up to par. It's very reflective of what we see. Almost 95% of inland marine policies that we see on prospective insureds are not up to par with what they actually need. The mindset to keep through the entire process is, am I going to be made whole in the event of a claim? And there is a huge misconception of that. They can say, I have a $2 million crane. I have it insured for $2 million. I'm fine. And they're leaving it off at that. But what they aren't considering, are you really made whole if your $2 million crane gets totaled and you just found out from one of the manufacturers you can't get a replacement for 6 months? Are you being made whole as a crane company?
Right. And that's especially relevant right now.
Absolutely.
Where deliveries are, it could be 2 years from
Yep.
now for a new crane. It's
Absolutely.
very relevant.
So you're missing out on that revenue that you're not able to generate with that crane anymore, which there's coverage for. You're missing out on still having to, if a crane gets totaled, are there still monthly payments on that crane?
So that's why
There's
we
coverage.
require insurance when we fund.
Yep.
Because if that happens, that note doesn't just go away.
And
Yeah.
there's times when we're reviewing the policy and we say, hey, this limit for you right now is at $5,000. How long are you going to be able to pay the rental company with $5,000 a day, potentially on what type of crane it is, maybe a week if you're lucky, and then you're in the hole pretty quickly.
Yeah. Those ancillary costs really turn into that iceberg under the water, specifically with how this can get out of line with obtaining a new crane. And even bigger, which is what we see a lot, and a lot of carriers in this space push back on this, is how is that crane being valued? Like, as far as the type of valuation, is it on actual cash value? Is it on replacement cost? Look at like what's just gone on with the marketplace of being able to obtain a crane. Equipment's up in cost. So if you're on actual cash value, which is basically new and it gets depreciated every year, that could be a lot different than what that 500-ton 2017 500-ton all-terrain crane is actually worth in the market. So it's something that we push for a lot, replacement cost valuation versus cost new, as well as telling our insureds, look at this every year, make sure you're up to par with what the replacement cost if this gets totaled with, just to keep that mindset of you're going to be made whole in the event of a claim.
Yeah, and each year you want to evaluate, what the years of these cranes are, because underwriters, carriers are getting even more strict with the amount of replacement costs that they will provide. There's certain, inland marine carriers out there that we just know it's 5 years, and that's it. Some we can get 7. A few years back it was easier to get 10 years replacement cost, and now that is even becoming a smaller margin of carriers that will allow that. So they're just tightening up all around on all things. Yeah.
Well, and I think like kind of Cam, to your point about the values, when we submit a deal, we have to talk to underwriters about the value of the equipment.
Mm-hmm.
And right now we're like, there's not a lot out there. So, we'll ask dealers or whatever.
So
but
hard.
I'll say to the underwriter, it's what someone wants to pay for it.
Yeah.
I mean, we're kind of in
Yeah.
That's what the value is what someone is willing to pay for it right now and how desperately they need it because there is such a lack of supply.
Yes.
But so I could see how that could have a very large effect on insurance.
Yes.
Big time.
Well, Tanya, it was great to get you on this podcast. We think what you do, as well as Harry Fry and Associates, is so invaluable for our industry because you're niche focused. You're just like us as far as you work just in a niche, as well as you're very involved with the niche from the association aspect of things, as well as being on boards and committees within the SCNRA. So we really appreciate you taking this time to get on with us for the podcast. And at this point, we'll turn it over to you if you want to give a so long to our listeners.
Yeah, absolutely. Well, again, I thank you for having me on to discuss this topic. And I think it's great to kind of get some information out there about what you guys are seeing and what we're seeing. And I can't say enough great things about your group too, because I think, like you said earlier, we do have to work in conjunction. And I always feel confident when I, refer someone to your group that they're going to get the right coverage. And it'll be the right coverage for them, but it will be the right coverage to help us get the loan across the line. So I appreciate you having me on, and hopefully we've enlightened some people today.
Yeah, like you said, we got to bring the most exciting topics, insurance and financing. So we got each other's back. Yeah.
Like, I'm finding this interesting. Most other people may be glazed over, but it really pertains to what I do every day. So.
Yeah.
I'm sure both of our competitors will tune into this podcast with their notebook and be like, all right, I need to know that. I need to know that. I need to know that. Oh, cool. But
I don't think I told anybody anything that they probably already know.
Yeah. Well, thank you so much, Tanya. It's been great.
Thank you. I appreciate it. Have a great day.
You too.